Have you ever found yourself asking the question, do I have enough for retirement? Are you concerned that you might run out of money in retirement, or do you even have a plan for retirement? If you're one of those out there that asks these types of questions, in this class, Mastering the Art of Financial Planning, the online class is for you. My name's Paul Durso. I'm one of the instructors that's going to be going through this material. And there's a couple other instructors that you'll get introduced to later on in the course. But what I wanted to do very quickly is give you an overview of what to expect. Now, this is an entire semester's worth of material that we're going to really condense down into some bite-sized pieces, very high level. We're going to be talking things about what your purpose is in retirement, setting an income plan for retirement, distribution and taxes, and how all of that plays a major role in your ability to provide for yourself in retirement. We're going to be talking about the things that keep you up at night and retirement concerns, all the way on down to estate planning and what you need to set up before you walk out on this wonderful world. So all of that we're going to be covering again very quickly in as much condensed format as we can in this online class. But before we jump into that, what I want to do is introduce you to a planning system that we use called Simplicitree. It's a very simple, easy to use and understand planning process that we take people through specifically in this class to help you understand not only the financial bit of information that we're going to be educating you, but so you can see it firsthand through our process. So what I want to do is introduce you to what it does and how it works. This is what the system looks like on screen, and I want to kind of explain a couple of the different parts of this planning process so you can know as we go through examples what to expect down the road. So we've got a visual that we call a tree, and there's two parts to it, what we call above ground investments and below ground investments, and we visualize that in that image that you can see here. Below ground investments are investments that are backed by one of three things, either bank-backed, FDIC insured, government-backed, which would be like TIP or securities backed by the full faith and credit of the United States government, or an insured investment, something like a whole life or guaranteed or even a fixed annuity, something backed by the full faith and credit of the insuring company. Those are below ground investments, okay? Bank-backed, government-backed, or insured. All other investments are above ground. So as we talk about investments and organizing and understanding the complicated world of finance, what I want you to understand as we go through here, we're going to organize them into two very simple, easy to understand concepts, which we call above ground and below ground, and we're going to visualize that there. Another thing that we're going to go over is what's called the principal tax concern. And what we're going to do is we're going to boil down asset levels into basically two major groups. We're going to put qualified assets together. These are 401ks, IRAs, and alike, into one category, and we're going to call them principal tax concern, because when you hit retirement, your qualified assets, 401ks and IRAs alike, are going to be taxed at even the principal level. That means if you've saved $100,000 in those assets, but now you've got $200,000 plus growth, the entire $200,000 as you spend it in retirement is going to be taxed. So we want to know of overall of a client or an investor's basically net worth, how much of their assets going to be taxed at the principal level. Another thing that I want to introduce you to is this whole row right here. These three circles, these blue circles, are called retirement rates. We're going to go over those in a second. And the most vital piece to this puzzle is what we call the cumulative income need. And this is going to come up a lot in this class. So these three rates, which are called retirement rate, preservation rate, and legacy rates, are probably the most important information you can learn about your future. Most financial planning systems out in the marketplace today, basically you put all of your information in the system, and then basically based on your risk tolerance, if you're conservative or aggressive, will formulate some guess, some rate of return. It'll be low if you're a conservative investor, it'll be high if you're an aggressive investor, and what happens is that rate of return, that guess, that assumption is going to base the overall plan itself. I think that's a flawed system. I'm not a big proponent of it. What this system does is it really calculates, it solves that for you. So if you plan out the rest of your life in kind of a chart manner, what the system does is it calculates the rates of return required to make it work. The first one's the retirement rate. And this is basically, if you want to live on $50,000 of income and you've got some pension and Social Security or whatever the numbers are, it'll calculate on, and we're going to have to guess some date of death, but based on that, it can tell you in this example, this person would need 3.92% rate of return to ensure their assets are not going to run out. So this person knows exactly how much return they need to make on their investments to never have to worry about running out of money. The next one is preservation rate. And the preservation rate here is 5.28%, which means if they have a starting asset base of $930,000, they know if they make 5.28% rate of return, they're going to still have $930,000 when they're literally on their deathbed getting ready to check out in this life. So the first one, that 392, basically means they're out of money at age of death. 5.28, what basically means they're going to have the same asset level at age of death than they do today. And the last one, which we call legacy rate, is how much return do you need to average to grow your assets living the same lifestyle. In this example, they can turn their $900,000 into $5 million if they average just under 8%. So whatever those rates of returns are for you, and they're going to be different for everybody out there, we have 3 different scenarios that we go over which are vital. You know, whether you just want to spend all of your assets, live off the interest and preserve your principal, or leave a significant legacy, we're going to know specifically the rate of return required to make that happen. The last thing I want to do before we stop this introduction is really explain to you what's called the cumulative income need. And what we do here is we figure out what pensions or residual income that you have coming in, we add them together, plus your Social Security, rentals, what have you, and we want to figure out how much of your retirement income is already created, how much is already accounted for. And this example, 50% of what they want to spend in retirement is already done. Through Social Security, what have you, it's already accounted for. Now we need to figure out, on the other side of that, what needs to be generated, and here's where the fears come in retirement. I'm uncertain that I'm going to have enough money in retirement because there's this shortfall. You start thinking in your mind, I've got this much pension or this much Social Security, that's nowhere near enough. That's only half of what I desire. Where's the rest going to come from? Is that enough money? Well, what we do through this system is actually show you what you need to generate, and if your assets are actually going to be able to generate that in income without having to worry about the fluctuations or ups and downs of the market, and how you can drive consistent income, or what you need to drive from an income standpoint to know you're not going to run out of money, okay? So this is Mastering the Art of Financial Planning, the online course. I hope you're ready. All you have to do is click one of the video links below to get started and enjoy this information.